So as a recap, let's talk about reversal points. As you can see, price was bearish, consolidates, and turns bullish. So your reversal point here is your consolidation. So in this lesson, what we're mainly going to talk about is how price behaves on the lower time frame when looking for your entry. So as a recap, you can see this is your supply and demand structure. Once price breaks the range and comes back inside of the range, what are you anticipating? You're anticipating a return back to your extreme, which would be your discount demand zone. So now on the lower time frame, you would see that price is making consecutive swings. Once price approaches your extreme level, price will go into your reversal point, which would be a consolidation. So now what we need to do in this lesson is figure out the consolidation. So let's talk about the basic reversal point, which would be your basic change of character. So here you have a downtrend. What you can see next is a break of structure to the upside, indicating that price wants to change direction. Price comes back inside of the range for a return to origin and changes trends. So here's an example of a basic change of character. So as you can see, price has been bullish. Price has been in a bullish trend. And what do you see here? Price breaking structure to the low side. Once price broke structure to the low side, price came back inside of the range for your return to origin and changed character. So here's an example of your double liquidity sweep change of character. You can see you are in a bearish trend. Now what price does is price breaks your swing high. By doing that, it indicates that it wants to change character. It wants to go in a bullish trend. But the difference here is instead of coming back inside of the range to your RTO and then change character, price takes out the swing low. By doing that, price takes out both buyers and sellers. So once the market is done taking out both buyers and sellers, now price changes character. So here's an example of your double liquidity sweep change of character. So what you have here is price broke structure to the downside. So this will be price breaking structure. And instead of coming back inside of the range how you would anticipate it in a classic change of character where price would return back inside of the range and instantly change character, what happened differently here is price comes up and takes out all the buyers. So all the buyers get stopped out, which forms your double-sided liquidity sweep. Sellers being trapped right here. And your buyers being trapped right here. Before price completely changing character. Example on your internal to internal change of character. You can see price is in a bearish trend. Instead of breaking structure, price rejects. Where does it reject from? It rejects from your extreme supply level. So now instead of continuing the trend, price now rejects from your extreme demand level. And this is what you call your internal to internal trap, where both buyers and sellers get squeezed before a breakout. Before you proceed, please make sure you like the video and leave a comment. This helps us continue making these free lessons. So we talked about reversal points, but now let's take it a step further. Let's talk about how these reversal points are formed when it comes to a complex model, which would be your Wyckoff. So in this case, this was your bullish trend. So price rejects. By price rejecting, you confirm your area as your buying climax, where there's no more buying going on. This is the end of buying. And how do you actually confirm it? By looking for your automatic rally, a strong pullback away from that climax level. Now what's happened next? Price rejects from your buying climax. And this is what we call a test. A test is a rejection from an extreme of a climax. If it's your buy climax, it would be an extreme supply level. If it's your selling climax, it would be your extreme demand level. So now what price does, price takes out your test and your buying climax and comes back inside of the range in a micro reversal point, forming your purge/stop hunt. This is your trap. So now price comes back inside of the previous micro range. This will be your return to origin. A retest of a return to origin range is your sign of weakness, where price is giving you a confirmation that the character is changing. Your last point of support is price breaking out of the consolidation range. So here's an example. This is your selling climax. An expansion away from your selling climax is your automatic rally. So now you have your range. The rejection from your extreme selling climax, which would be your extreme demand zone, is your test. And what happens here? Below the test is where the stop losses of anybody that took the demand entry. So anybody that bought price at that extreme demand level, their stop losses would be beneath your selling climax. So how is this liquidity taken? Via purge, which is your stop hunt. And your purge produces a demand level, which would be your return to origin. So just how we explained in the second part, you always want to mark up your macro range. So your previous high was here and your low is right here. This is the low that initiated the move, and this is the structure that was broken. So once price came back inside of the range, now you have this high as the high of your range. So the fact that price broke structure and came back inside of the previous range, you're looking for your extreme level. You're looking for price to retrace back inside an extreme demand level. So what we do next is we go on our micro and we wait for our confirmation, which is our Wyckoff. You have a rejection. Let's see if we can confirm this being a selling climax and this being a automatic rally by a test. So now we can confirm this being a selling climax and this being our automatic rally. And how do we confirm all this? Based off this reaction. Why is it based off this reaction? Let's make it black. Why is it based off this reaction? Because this reaction is your test. So what are we waiting for next? We are waiting for our purge. Price is taking out the selling climax and coming back inside of the range. So this is our purge. Now price broke structure. Barely wicked out. So where are you looking for an entry now? You can wait for a 50% entry here. You can wait for an extreme entry. You can wait for an extreme entry right here, or you can wait for a fair price entry right here. And as far as your stop loss goes, remember, this is a macro setup. So the fact that this is a macro setup, you don't want to have your stop loss right here because price can always pierce through this level. So you would still have your stop loss beneath your macro extreme range, and your TP would be the other end of the macro extreme. And why is the stop loss this, because this is simply a confirmation. This is still a macro setup. This is still a macro setup. That's why the stop loss is right here and not right here, because this is simply your confirmation. So here's another form of your Wyckoff setup where you're anticipating your purge to occur in your extreme zone. So let's mark up our extreme demand level. This will be our extreme demand level. And what do we see here? We see our climax. This is our selling climax. And this is our test. Again, how did we confirm our selling climax? By confirming our test. Once we can see a test, an extreme climax being tested, now we can confirm this is our selling climax. So what are we waiting for next? We're waiting for our stop hunt. So the difference here is, in the previous example, the entire Wyckoff schematic happened within our discounted area because that was on the micro. But when looking at a macro swing setup, you're looking for your stop hunt to occur in your extreme level. As you can see here, the climax and the test both occurred in or around your fair price, which is the middle of the range. But now you're anticipating your purge to occur in your zone, in your extreme zone. And this will result in your sellers getting trapped. Everybody that's trying to sell the market for a breakaway, not understanding that there is a macro demand level waiting for them. So what do you have here? You have your purge. You have your purge right here. And you have your return to origin right here. So let's look at this last example. When it comes to your macro swing setup, the purge could occur not only at an extreme level, it could occur as a stop hunt of itself. So if you look at this right here, if you go on your macro, you can see that this entire thing is a macro purge. This is a macro purge, and we understand that once price breaks structure and quickly returns back inside of the range, you are targeting an extreme level. So now when you go back to your micro, what do you see here? See that this was our selling climax. Why was this our selling climax? Because look at the test. You had a test. Why was this not a selling climax? Because there was no test. So you can only confirm a selling climax post your test. Now that you had a test right here, you are waiting for this selling climax and this test to be cleaned up for a purge. And what happened here? This purge level took out both your selling climax and test and your macro structure. So again, when you go to your higher time frames, you can see that this was a macro purge, a quick liquidity grab to continue the trend. Hope you guys enjoyed this video. Please make sure you like, share, and subscribe, and let us know in the comments if you guys want a part 4.